Hello, Culture Matters podcast. Before I introduce you to our guest, here's a quote I picked just for this episode. A person can be highly educated, professionally successful, and financially illiterate. Robert Kiyosaki. Our
Nice.
guest today is a good friend of mine, Jake Penny, Penny Capital Management. Himself and his partner, Leanna, have created an empire, really, of 50 plus properties to help those that are disenfranchised or want a different way of investing into their future from Wall Street to side by side partner with them on Main Street by adding value, building social equity. What does all that mean? Real estate investing, doing it right. Jake's been doing this for almost a decade that I'm aware of, and he makes all millennials look lazy. So that's me saying that, and I'm excited to get to and oh God, we go way back. I mean, God, there's so much to unpack. I've known Jake for years since I was running around Philadelphia with a camera, and there's so much to talk about today. Thanks for coming on.
Thanks, Jay. Appreciate it. Yeah, we go way back. Oh man, when Culture Matter first began.
It's so. First, I like to understand something because when I was preparing, you talked about looking at renters as residents.
Yeah.
Is that a cultural viewpoint of meaning not like how you're viewing the relationship? Can you unpack that a bit? Because that got my culture matters, spidey sense, I guess.
Spidey sense is tingling, right?
Yeah. Can we talk
Yeah.
about that? Let's start there.
Yeah, so for when we first met, we were doing fix and flips, a lot of fix and flips and everything, and that was cool, right? You make awesome money, you get to see the transformation of properties, and you're like, hey, we're making something really beautiful that was once crap, and a family's going to live in it and make a ton of memories in it, and we make a fat check as well, and our investors make money as also, and we don't have to be behind a desk and everything, but 9 to 5, and it was great. But after just doing that for a long time, 6 years, it got to be the motions, going through the motions all the time, and we lost, I think we lost purpose, just getting stuck in that rut of doing the same shit over and over again. So we transitioned to affordable housing. Now we still do flips, don't get me wrong there, because that's a lifeline that funds a lot of our expenses for business and operating expenses. It pays for our team and everything. But we transitioned to affordable housing to make a difference in real estate. And that goes for Section 8, HUD, veteran housing, all these different subsidy programs for people that are in need, because we saw a flaw in the system when it came to that. All these landlords that are on these programs just think like, hey, the government's giving a free check. These nonprofiters are giving free checks. Let's take advantage of it and just place random people. It doesn't matter what the condition is. The house looks like shit. It's falling apart, leaking roofs, and I don't even know how they get away with it. I honestly think they pay inspectors, pay them off, because the horror stories we hear is just like, hey, I mean, this is crazy. Like, people are, bathing in their kitchen sink because the bathroom is disgusting, mold doesn't work, the roof's leaking, and these landlords are still getting paid. So we're like, hey, let's get into this, let's make a difference, and let's transform tenants into residents. Meaning, there's a different level. When I think of tenants, I think about just random people moving into your houses. There's no respect level whatsoever, and it's a paycheck. And don't get me wrong, a lot of people that get into real estate, we get into it for money. Yes, don't get me wrong there, because nobody wants to work for free. But at the same time, we want to make a difference, and how we do that is we're going into these programs and in lower income areas where they're used to terrible housing, and we're like making it the main line. We're going in there, we're fully renovating these houses, giving them all a brand new everything, down from the mechanicals, all new electrical wiring, plumbing, HVAC. We're giving them obviously new roofs because we don't want it leaking and them having, flashbacks of, their last landlord. But we're doing full custom kitchens, full custom bathrooms. I mean, you would think it's literally, Point Breeze or, Rittenhouse Square getting, renovated all over again in our lower income areas. And we're doing it on a budget because we have an awesome acquisition team, awesome contractors, and we're great at sourcing high-end product for cheap. And the finishes that we're putting into these properties, these people are turning into residents because they're respecting, they see the respect we're putting into these houses, and that reciprocates to us that, hey, they respect it, we respect it. This is now my home, not just a temporary shelter I'm staying in, or that I just have to live here to survive and get by.
Have you found that people keep it more respectable? Like they're respecting it back? Is that what you mean? Like how?
Yeah. I mean, they
Cleaner,
take cleaner,
fixing?
less. Well, we do every single property to not have any maintenance for like the next 15 years. That's why we totally fully gut everything and redo it all. But these people, the product that we put out attracts a resident mentality person that's living there. They have more respect for the places. They respect you as a person. They respect the place they live in. They like it so much. They want it to be clean all the time because it's such a beautiful place that they never had before necessarily. So they're used to going in and, like I said, having terrible housing. So it's like, all right, whatever. The landlord doesn't give a shit. He's not fixing anything. Screw this place. Why would I respect it? I mean, just like you, like for instance, if I didn't respect you, why would you respect me, Jay? Whether that's on a personal level, or
makes it harder.
Or I come to your house and I'm like, screw this. I'm throwing all my clothes all over the place. I'm not respecting your place. Like, why would I do that? Why would someone do that? I would assume nobody would do that in your home, right? Because you put out a product, you put out a presence in your own home to where people respect and know, like, hey, this is a sacred place. Kind of something like that.
Well, there's so much here from a sociological viewpoint in the sense that I wonder, that idea of pulling somebody up from the bootstraps?
Yeah.
It's hard to do that when you're surrounded by dirt. Like that's been the argument on one side of the equation. Oh yeah, it's easy to tell somebody to pull themselves up from the bootstraps when they have no opportunity.
Yep.
So I wonder if that's you guys being proactive in creating that atmosphere. Like the saying, you become who you hang out with the most.
Oh yeah.
Having that clean, nice environment. I wonder if that is creating upward mobility for people, or like inspiration, or like I can get to the next level. I don't know. I'm curious what your thoughts are on that. If that's
I definitely think so, because you have to think about, like you just said, the 5 people you hang around with, that's most likely who you're going to be. Same thing about your environment, right? If you have an awesome environment, more success thrives, better ideas, the mental stability of yourself increases. You become more positive. So yeah, I totally think like, hey, it could have a really good psychological positive impact on these people as well, because they've been used to like shit housing for their whole life, and now they actually have this super nice shit that they probably only seen on Instagram or at a family or coworkers house, and now they're actually living it. Now
well, like in our circles in personal development, how we go to masterminds, maybe we go to like the vision board. It's almost as if you're bringing that to your product with your product.
Yeah.
The vision board for someone. Hey, because I remember I had food stamps as a kid with I was a single parent household, and we ended up in one room, and it was hell. Like I had a fight over everything.
Yeah.
So I could only imagine, what a beautiful. Okay, I got a million questions. Thanks. This is great. By the way, I didn't know that that's what you guys were doing specifically.
Yep.
Can't imagine how many families that you're changing their history.
Yeah, and it's really cool too, because we're still we're still in the day-to-day process with everything. I deal with acquisitions, meaning finding deals, right? We have a full-time acquisition team, 3 people that work for us full-time doing cold calls, marketing, everything like that. And I built so many relationships with wholesalers or agents where I just get an influx of deals all the time.
Huh.
Where we're closing like 10 deals a month that, I have to push away deals now. Leanna will kill me if I keep buying more. She's like, where are we going to get the money? I was like, we'll figure it out. But what I was getting at is, we've even, people are hearing about us in the marketplace. We don't even know these people. We're getting referrals from people like we don't even know. Hey, do you have a house? We heard your houses are awesome.
Wow.
So we're even renting out properties before we even put them up on the market, before they're even finished.
No way.
In the gut stages, I kid you not, studs and all. I want your house. They sign the lease, they give the deposit, everything, and they know when they move in, it's going to be an awesome house.
So there's part of the idea, because the retention is higher, there's a stronger pull on the refinance, or just a higher cash flow to make it all work. And can you elaborate on that, if I'm off on that, or if I'm on the right track?
Yeah, so on the, obviously we're going in with private capital to start, because that's how we buy so many
Because
deals.
this is a for-profit business, correct? You're just going
Correct.
about it in a way that's
Yeah,
this is your value proposition.
Yep. This is a for-profit business. This is our value play in real estate. So yeah, we're going in, we're buying these properties that are from retired landlords, slumlords, mom and pop owners that just are done with the property. We're going in, we're fully gutting them pretty much down to the studs, redoing them, getting a tenant in there through subsidies, through government funding. We still do the same exact screen, because we own like blue collar neighborhood rentals as well, like regular market rate rentals. We own them as well. And that's great and everything. But we're still doing the same exact screening that we would do for regular rentals, market rate rental, that we are for these HUD programs and nonprofit programs. Just because the money's guaranteed does not mean anything to us. And I think that's where a big stigma comes from, that these programs are terrible and, they'll trash your place and blah, blah, blah. That's all BS. It's because the people that get involved in these see a guaranteed check and everything, all their ethics, values, morals go right out the door because the cash is guaranteed.
I got a referral for you in Margate. Let me just, I think it's 92 Monmouth. Hold on. We should just make this a lot. You know what I'm saying? It's long. I know. I got a set. It's 11 units. I walk by, it's by Tomatoes, 11 units, all Section 8. And there's a parking lot, and it's zoned. You can build either, it was like 6 or 8 singles but it had to be commercial on the bottom of 3,200 square feet. And I don't know. That's just late in my head. I'm like, I want to send this to you. Why? Because it sounds like you would really take care of those people that are in there.
What's awesome about that too, Jay, is when you get into mixed use, it's something we're going to be getting into soon.
I won't say it on the podcast. Then everybody's going to be
I want that deal. Don't say it.
Because I went and walked it with a friend the other day, and then he's not going to do it. And I was like, so no, we'll keep it all live. Sorry, everybody. I got excited for a second. Sorry, go ahead.
What's really cool about the mixed use stuff, and this is how one of the biggest builders in Point Breeze started. Like, he's the one that started. I forget his name, but I remember the story because it was all about bringing the economy up and the people up. So what he did is, when he was building Point Breeze up before the Philly boom started, like he started the boom. That's why you see so many coffee shops on every single corner on Point Breeze, because he said, with proper housing, we need good economics. We need people to have a place to go, people to work, people to see the people in the neighborhood, and employ the neighborhood too. So that's why you see so many, coffee shops in Philadelphia on every single market, because he started that trend.
It's got to be Ori. That's okay. I could be wrong, but if so,
I forget his name.
Well, he has it's like, it looks like his house in Margate that's going up right now looks like it's the size of an entire city block. I just want, I'm saying this,
Probably
you're
right.
not saying this. And I just want to make a statement that I think, I'm curious what you think about this. When you solve a big problem, you're rewarded for that.
Oh
I'm
yeah.
curious what you think about that. Do you agree with that train of thought, or are you more of a you Robin Hood, you want to take from the rich and give to the poor? Like what's your philosophy around that?
No, I'm not the want to take from the poor and, you know, get rich.
Take for
No.
the rich, give to the
Yeah,
rich.
yeah,
Take
however
for the
that
rich,
works now, because I come from not you know, nothing, not like your upbringing, you know, but I still come from a lower middle class family that has no investing experience whatsoever. None of my family has ever graduated college. My mom was a stay-at-home mom. She cleaned houses. She still does to this day.
wow.
She's like she's what, 57 years old or something like that. My dad's an auto body guy. So no, we don't come from riches or anything. So I built everything myself with my partner Leanna, and we
Wow.
bootstrapped the whole time. So by no means, you know, if anything, I want to crush the guys out there that are snobs.
Hmm.
You know, that's the only, like, you know,
Competitive.
competitiveness, like the jerks out there that, you know, the mainline people that were born on the main line and think they're good shit, and they look down the hill at people like me and you know. They're the
Oh,
people.
I'm aware of that. Yeah, yeah. I've
Oh
been
yeah,
through that. Yeah.
they're the people I want to put in their place and be like, no, like, I made it myself and I'm bigger than you, so shut the hell up and respect these people. That's
I
that's
got
the
actually a
only.
question
Yeah.
around that, because we have a lot of listeners that are not just already have made it, but are coming up the ranks. And you're in your 30s, right?
No, 28. Just turned 28
Yeah.
March.
You, by the way, I'm not an ageist, so I'm excited about that. Like, you know what I'm saying? Yeah, I have had a few guests that are in the late 20 range and all successful like yourself. And so my curiosity is, how have you, what are some of the obstacles that you have faced? If I'm correct in this assumption, being perceived as young, and what comes with that. And of course, I'm biased and ask that because I've started, you know, very early
Yeah.
as well. So what have you faced, and what would be your advice to our listeners that are younger, trying to make it? Maybe they're just starting where you know you were 5 years ago, 6, 7, 8 years ago. So what would you be? How do you know?
So first, I'm going to answer your value question because I did not answer that
I get excited.
T. I kind of like went on a tangent because you got me all riled up on the rich. So value. Yeah, value is tenfold. What you give out is what you receive, you know, and that's how the world works. If you don't provide any value, well, you won't receive greatness or anything. The more you give, the more you receive. So the book Go Giver, or the leader of the starter of BNI, if you're familiar with BNI, he wrote a book called Giver something, and it's
Giver's
all
Gain.
Giver's Gain. Yeah. So I just joined BNI.
Oh, congratulations. Great organization.
Yeah. So Giver's Gain. So huge. Everything revolves around
I
giving.
actually was asked to leave that because they didn't ask me to my face. They didn't understand what Culture Matters was, not the company, just a specific group. This one lady that was like running it, they didn't do it to my face, but like I actually thought that Culture Matters was a stupid idea. Now that's not a knock on Mark or the company. It was a specific person. Sorry,
Yeah, the groups are definitely, you know, intense. Like I just joined. I'm only on my second meeting, and I by accidentally started talking about other stuff we do, and somebody else is doing that, and they're like,
it's a great organization. I want to make
yeah,
sure.
yeah. It's great. It's great.
Huge opportunity.
Oh yeah, I can't wait. But anyway, value. So once we started providing more value in the marketplace by having purpose and a mission, that's when we just saw a crazy parabolic growth. I mean, like no other. You know, when flipping houses and all that stuff, it was like, all right, well, you're providing value. There's a mission, but it's really not it's really not like purposeful. There's not really anything you're giving to the marketplace. Yeah, you're taking an abandoned house, or not abandoned house, but like a dog shit house, and making it an awesome place. And someone's going to move in there. They're going to make a lifetime of memories, and that's all fine and dandy. But that's the whole process, repeating itself over and over again. And is it a win and lose situation? I don't know. It can be, right? Because somebody, to make a profit in flipping houses, you have to buy for super cheap, right? So that your profits build on the front end. The seller is obviously not getting retail price, but they're okay with getting the price that they want in that, like right then and there. So they accept that offer. They're aware it's below market value, but they're not getting the full asking price or whatever. But anyway, yeah, that's another story. But once we started providing more value, purpose driven, for people, we just saw crazy ass success. Like, I mean, within 12 months, we tripled our net worth, tripled our portfolio. Next thing you know, we have lenders, private lenders, lining up at the door because, our current list was referring their friends and family. We got called into the head of housing in Chester. We got called into the economic redevelopment department to have a meeting with that person, because we're getting headway, we're getting noticed. And the more that we're doing, the more that we're seeing that parabolic, success go up, because we're providing more value and people are seeing what we're doing and they're hearing about it. That's on value. That's what I think. And I think if you don't believe that giving tons of value does not come back tenfold, I just think you should probably, I don't know, just give up. Don't do anything, because you're a taker. Takers don't survive. But going to the question of how was it getting started, being so young in the business, in a business too that's filled with silverheads, I should say.
Ooh, that's an interesting. I've never heard that term.
Silverheads, silverbacks, like
that's like a gorilla.
Older men.
Oh. Established.
They went from rags to riches, if they did, but that's what I'm just saying. That's like the general topic above, and they got it all figured out. And young man, if you come in here and think you're going to do this, there's only one way, blah, 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 blah. I went to my first real estate meeting. It was at DPI, if you're familiar with that chapter.
No.
It's Delaware County's real estate investment club. It's like their national RIA. And this guy, my first or second meeting, and he was like, for all you young cats here, if you think you're going to make $1 million in real estate, you're in the wrong place. It's not going to happen. Who the hell are you to tell me my dreams and aspirations that I'm not going to make? That's not going to happen. Like, the reason why we get into real estate is because it's created more millionaires ever than any other industry in the world. It has given legacy wealth, generational wealth, cash flow, time freedom, peace of mind, the ability for you to spend time with your loved ones and do what you want, when you want, wherever you want, and not have to look at a price tag. That really hurt me, as a person, and as like getting started in the beginning. And I'm like, I'm never coming back. Like, how dare you tell me what I can and cannot do? Like, that's like, I don't know, like telling a little kid, you're never going to be anything. You're a piece of shit or something like that. You're not capable of anything. Like, it's just terrible. So yeah, I will talk crap on the DPI because that was annoying. That was bad. But it was really hard getting started because I was 21 years old. Same with Leanna. She's only 3 months older, 2 months older than me.
I guess that's when we met.
Yeah, 2021.
And I was a little younger than you are today.
Yeah, Yeah. You were probably my age then.
Well, no, because I'm about to turn 32. So maybe I met you when you were like 23, 24.
Okay. Possibly. Probably like 22 then. Yeah.
Just,
But it
just
was
all those memories flooding.
it,
Why start at 21? What was your inspiration at that time? I mean, let's start there.
So getting started, well, growing up, wasn't really smart at all, book smart. I was in like the special ed learning and whatnot. Not that I have like any like challenges or anything. I wasn't a quick learner. I couldn't really read well. Took me a long time to process stuff. So I always thought growing up that I wasn't gonna be anything with like school. Like I wasn't gonna have a professional degree or anything like that. Um, Growing up as well, my dad auto body, worked his ass off 24/7, 365 to put a roof over my mom and myself's head. So I'd wake up in the morning, my dad would be gone. I'd go to bed, my dad would be gone. That literally was probably until I was 15 years old, I want to say 14, 15 years old. Barely. I saw my dad, but I really didn't, because he was always working to provide. I'm like, man, like this is crazy. At a young age, at 13, I realized that there's something wrong with this picture that's not reciprocating with what we have or the freedom that we have. Like my dad is working his ass off 24/7, making the man a ton of money. I know the man,
Mm,
millions of dollars a year in the industry. It's an auto body shop on the main line. Like
wow.
my dad's well known in the industry. Like he is the guy. Not just saying that because he's my dad. That doesn't like, hey, cool. Like I'm the person that tell it straight. If you're not good, you're not good. But I
Yeah.
know he is, and everybody knows he is. And he'll do anything for anybody. Like he's known as an awesome guy, but also better in the industry. Like he's one of the best. And I'm like, this is not making sense. This is not making sense at all. Like I don't see my dad. He's definitely making this guy a ton of money. Where is this lining up? Because I see all these people on TV or something like that, or where they have a huge house, nice cars, swimming pool, they have the life. And one of my dad's buddies, I'm pretty sure you know this guy. I won't say. He owns a title company. Okay, a well-known title company in Philadelphia, outside of Philadelphia.
Mm-hmm.
And this guy, he has a Ferrari, a Bentley, a G-Wagon, a Rolls Royce. He owns a house on Aronimink golf course. He makes a shit ton of money. I never seen this dude. I always saw him when we were out, driving nice cars, always have nice clothes, nice freaking watches. And a few of other my dad's buddies as well had big houses. They had beach houses, everything like. I'm like, what are they doing differently that my dad is not doing and my mom's not doing, or anybody in my circle, in my sphere, family, friends, foes, not doing? How can I do that? And how can I have that lifestyle? So I started realizing that at 13 years old, that I needed to do something different in life. I didn't know because I didn't have any resources. None of my family had any investing experience whatsoever. We didn't have college degrees. I wasn't smart. I didn't have money. And I didn't know anybody that necessarily had money. I did, but I was only connected through my dad, and I didn't really talk to these people. So I got started. My dad was like, hey, you're 13 years old, you're becoming a man. It's time for you to start making money. So he was like, you're not going to be like your friends. You're not going to go work minimum wage, making $7 or $5 an hour, whatever it was back then. I'm going to buy you a riding lawnmower, blower, weed whacker. I'm going to buy you a trailer too that your mom can hook up to her SUV, and you're going to start door knocking and cutting lawns.
Wow.
So this was at 13 years old. So started doing that, making really good money in middle school, high school. Started door knocking, building an awesome lawn route, started doing mulching, tree trimming, bush trimming, installing stones, power washing houses, everything like that. Next thing you know, I was employing a lot of my friends throughout high school. And at 14 years old, I got this bug. I forget where it was. I think it was from my Aunt Donna. She started talking. She worked for AI DuPont in like high up in like the tax division. And I think like investing came up or something. And Warren Buffett, Peter Lynch, Ray Dalio, stuff like that. And I started getting the bug because I was like, hey, like that's investing. That's how you get rich, like investing. And the only thing that we know as
Seth Klarman.
the only thing that we know as normal people, there's nothing wrong with normal, is Wall Street. So I was like, hey, I need to buy some books. So went to Barnes and Noble, started buying investing books, Trading Stock for Dummies, the Renaissance Stock Investor, things of that nature, Warren Buffett's books. And I started reading at a young age. I could barely read at all. Like it would take me like 10 minutes to read one freaking page. And at 14, I said, Mom, Dad, like, can you open me a stock brokerage account? Like, I want to invest my money that I made from landscaping and put it into this account. Not that I knew what the hell I was doing at all. I had 14 years old, but I'm like, hey, dude, like, I'm going to buy some fucking Apple stock.
Yeah.
Yeah, I'm going to buy some Ford. I'm going to buy some GM, Alcoa. These are all the stocks that I was buying at that age. And I started building up a nice portfolio, started trading and everything, and started to actually learn and call it maybe get lucky. I don't know. Started making some really good money investing every single dollar that I had with making with landscaping and whatnot.
Wow.
And that's where I got started in investing. But then I realized as I got older, I think around 17, 18, made an awesome trade, made like $30,000. It was a momentum trade. It was like $30,000 within, I don't know, like 20 minutes. Crazy pump stock. Made that money at 17, 18 years old. You make that type of money in 20, 30 minutes, and your head explodes like the world's largest freaking inflatable balloon. You think you're the man. You think you're on top of the world, and you go all in on the trades that follow. And you blow your account. So,
that's good.
That being said, I realized there's a lot of emotions in Wall Street in trading, and there's a lot of flaws too. Not just based on the trader, but also within Wall Street, that the regular person doesn't understand or doesn't have control over, that could plummet their portfolios within seconds, minutes, days, overnight, for nothing that has anything to do with them or their portfolio themselves. A tweet, a freaking something happens overseas, a world disaster happens, governments or shit like that. Next thing you know, their portfolio is down 30, 40%. And I saw these things as I was in the markets. There was TD Ameritrade one day had a blackout. I was in a trade. Nobody could access their accounts, but I guarantee you their traders or their black box algorithm traders on Wall Street were working totally fine. We could not access the accounts. I knew other people that were trading, and I was locked into a trade. Wow. I finally get the sign back in. I lose $7,000. Okay, that's not my fault. Who do I call to get my money back as a refund because their trading platform didn't work? It doesn't work like that. So I was like, man, this is it. I'm done. There's too many flaws with this shit. I literally, 2008, I was, I don't know how old I was, but I saw this shit happening all the time. And I was like, I'm out. Like the next best thing is real estate. But I was like, how the hell am I going to freaking afford, my first property? I got to buy it. I need a mortgage, or I need to buy it cash. Never had a W-2, never paid taxes in my life. On that point, I paid.
And this time you're about 12, 13, 14 years old.
Yeah. Well, this was between 13 and like 17.
So I just want to make sure the audience is following that. Like,
That big trade.
You were
and,
like
all that,
13, 14, 15 years old. Like I was playing, I think I was highly ranked at World of Warcraft at that time.
dude, I was killer at RuneScape, bro.
So you were better than me at everything. You were making money
No,
and you
no,
were
World
top
of
of your
Warcraft was
team.
the next level. I was not on that level. I wanted to get involved, but them guys were crazy.
This
They
is
had
pretty
shit going.
impressive. The best I did was make some money off selling some gold in there, but nothing. You were in trades, you were out of trades, and you're saying that was it a level of control that you didn't have at the time that you saw?
Very emotional. Chasing the win, chasing the dollar, and got to a point to where it was more speculation and gambling than anything. And that's really what a lot of people are investing in when they invest in the stock market. Because if you ask anybody on this earth that has a 401k, I guarantee you they haven't looked at their statement in the last year, because they invest in HAP, hope and pray. They get that statement in every single month and they file it right away. And when the day comes that it's time to retire, they're like, ah, shit, I probably should have paid more attention.
I've heard people say that.
A lot. We're living it right now with COVID, with the economy. It's happening again. People that thought they were going to retire are not going to be able to retire anymore because they gave up control and they were ignorant to not learn the market and how it works. So back to like 17, 18.
Amazing.
Real estate was the next best thing, but I didn't know how I was going to make it, like save any money. I was still doing landscaping, still had money left over. I didn't blow all my money. What was it? I started reading a few books. I read Robert Kiyosaki's Rich Dad Poor Dad, Business of the 21st Century, and a few other like awesome. Think and Grow Rich. Okay. How to Win Friends and Influence People. Like started reading books because I joined an MLM. It was called Vima back in the day, and started getting surrounded by a lot of.
I've heard of that.
Yeah, it's like an energy drink company. This was around 18, 19. And started getting around a lot of awesome people and exposed to the personal development world. Like I went to Bob Proctor's, Tony Robbins, what's his name? Dal Hardy, Darren Hardy.
Darren, the compound effect.
Yeah. And started being around these high income earners and these gurus, which they were awesome. One of the originals, these guys are awesome. And I started to get on this self-development trip, and I was like, hey, I gotta get into real estate. Just don't know how I'm gonna do it. So an event came up. Literally, I'm in college. I'm coming home on the weekends to cut lawns. It's getting to be a pain in the ass. My dad's helping me out cutting when I got to study, because to pass an exam I got to study for like 2 months to pass a freaking exam to even get like a 75. Leanna, we were dating, and she's like, hey,
cool.
There's this, you want to get into real estate, there's this real estate event back at home. It was outside of Temple University at like a Hyatt or a Holiday Inn or something like that. And it was like, she was like, Christina and Tark are going to be there. They're giving away a free Apple iPad or iPod. So we're like, oh, all right, let's go. We go. Nobody's there. Like Christina and Tark aren't there. The freaking Apple iPod or whatever is a knockoff MP3 player. But we got a lot of value of it. This guy, Steve Wynn, was training there, who's actually a well-renowned speaker. Like he's a real big deal. He was showing up for this free event. We're still, we still talk to this day a little bit. And, at the end of the event, it's like, hey, we got a 3-day boot camp for you. It's $3,000. So if you do your first deal in the first 90 days, we'll refund you. That's a win-win situation. However, I didn't really have the money, and I was totally skeptical too. I was like, hey, I'll figure this out. I'm gonna do it myself.
Mm.
I'll come back when I have the money, when I do my first deal, and I'm investing it. Leanna's like, nah, like, we're doing it. Like, bring out your credit card, boom. So we did it. Went to the 3-day boot camp, start to go through the motion, go to that. It was freaking awesome. At the end of that 3-day boot camp, the speaker was Mark Risco at that time, Kangaroo Millionaire, he goes by, and awesome guy, like one of our best mentors still to this day, great friend of ours. And he taught that 3-day boot camp. At the end of that 3-day boot camp, though, there was the next level, and that was a $30,000 freaking mentorship program. That was the holy.
Now we're getting real.
Like, hey, you want to get rich? This is it. But you got to pay to play. This is financial literacy. This is financial education. It's not your bachelor degree crap. I was like, hell to the no. First of all, I don't have 30 grand. Second of all, I'm not paying someone this. I'll go do my first deal first, and then I'll pay for it. Point blank.
Seems rational.
Yeah. And it's funny too. At the second day of the boot camp, they were like, hey, if you have a capital problem, no problem. We're going to help you out and learn how you can hack the credit system. And what they taught us is how to legally manipulate the credit system to get a bunch of credit cards so that we have revolving credit to buy assets with now. Because you can buy real estate on a credit card. It's easy. We do it all the time. However, that was for the leading pitch of the next day, to use that capital to then
that's hilarious.
Buy that course, that mentorship program. And it worked. Like in 15 minutes between Leanna and I, we had like $60,000 in revolving credit lines. It was super cool. We were so astonished. We're like, holy shit, this is crazy. We're printing money out of thin air. Again, Leanna came in. She was like, put her foot down. She's like, no, this is what you want to do. This is what we're doing. And, we've only been together for a couple. I mean, we've always been like best friends, but this is like, we've only been together for so long at that point. And she was still in college. She was in nursing school, 4.0 student, smart as shit. And I was, pretty much on my way out of college.
Entrepreneur.
We signed up, and probably the end of that semester, I dropped out of college to do full-time into real estate and to figure it out, to be a full-time entrepreneur. So we started the mentorship program. By the first event of the actual mentorship program, we already had 3 deals, not knowing where we were going to find the money, not knowing who the contractors were going to be, any of that stuff. Figured out what hard money was, found a hard money lender, local guy. He ran an accounting firm, so he had access to capital. So we're like, hey, we're going to use this guy. Literally 2-3 days before settlement, the guy backs out of all 3 deals, says, hey, I have this oil and gas deal that I need to put all my funds to. It's a home run. I can't do your deals. Sorry. We're like, shit. I literally have, because we extend it like two or three times on closing. So every time you do an extension on a closing, they're like, hey, we want more skin in the game. Because if you back out, they want to keep that money. Absolutely. So between all 3 deals, we had like 35 grand hard on the deal. And 2-3 days before closing, we have no money to close these deals. So we're shit in the bed. We don't have the money. It was like $300,000. And so I started banging the phone, calling family and friends. And, my grandmother pulled through at the last minute. I'm like, grandma, my mom, I call her my mom. Like, hey, I'm about to lose this money. Will you, have the confidence in me to do this stuff and to help me get started and get started in real estate? She said, yeah. So went to the bank, made the wires, and closed on all 3 properties. And that was the start of it all. That was at 2021.
Wow.
And, going back all the way to the first boot camp, how we get that that refund if we did our first deal in 90 days. Well, we totally forgot about it. And well, we never got the refund because we were over. We did we had the HUDs because you had to prove that you had the HUDs, but we forgot. And we did it before 90 days, but we forgot about it. And once it's over 90 days, even if you closed it beforehand, if you didn't submit it before 90 days, you didn't get the refund. So we're like, all right, screw it. This is cool. It's fine. It gave us the confidence and the will to win. So we'll take it. It's part of tuition to the market, part of our growth. And then from there, yeah, we got started.
So let me get this straight. So, 7, 8 years ago, they're in that moment where you're dialing for leverage essentially to make these deals happen.
Yeah.
And then where are you today? Like, just so the audience has a full understanding of where you've come from and what yourself and Leanna have created.
So from 7 years ago till now, as in like portfolio, net worth.
No, just like the amount of families that have homes now that are managed by your organizations.
Oh yeah.
Like, what does that look like? I guess, yeah, you would call that the portfolio of assets that you have, that you're responsible for, that you've created value in the marketplace.
Yeah.
Just so the audience understands, like, I think that's pretty powerful.
Yeah, in the beginning,
that story to where you are today. So where are you today, I guess?
Bootstrapping in the beginning, not having a W-2 or tax returns. I left a little piece out in that whole process of, between not getting funding to calling my grandmother to save the day. In between that 1 or 2 days that I had in the middle to try to make it happen, to give everything that I got, we went to like a ton of banks in our local market, local banks, and applied for mortgages. Every single one got denied because I didn't have a W-2 and I didn't have tax returns. Then I was like, hey, what if my dad comes to be a cosigner? Nope, that doesn't work either because everybody on the loan has to have, income, tax returns, blah, 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 blah. So fast forward, raising capital, day one, private funds, that honestly, I think set us up for success because we were forced to go the way of raising private capital, because everybody starts usually by saving their own money, starting with banks, and then they get 10 properties and the banks cap them out. And they're like, where do we go from here? Well, we don't know. We're saving up, 2-3 years just to get a down payment to go buy another property. And it takes them 10 years to buy a few properties. And it's like, that's not really scalable. That's not financial freedom, because a single on a lower
scale, that's a lot of work and not a lot of return.
It's a lot of work. You're cash flowing, $300-400 a month, but you're putting down 40 grand on a property. That return isn't really reciprocated, right? Something goes wrong in the property. Damn, there goes your cash flow for a year. Tenants don't pay. Damn, cash flow. Boom, you got to pay for that mortgage. So starting off with private capital forced us to start raising outside of banks, non-traditional financing, to where we can buy property based on the asset itself and giving these investors the security based on the property. Since it's tangible, we give them a mortgage.
Well, let me just make sure I follow this for the audience. By doing it that way, basing on the property itself and not based on my own credit worthiness or my own income, it's lowering the likelihood that the property could be shit. Meaning, if I have a really high income and really good credit, I could buy a shitty property.
I can buy anything.
But if I don't have the income, I have to buy the best asset possible. Is that what you're saying?
Yeah, well, I mean, pretty much too, because most of the time, the properties that we buy won't be funded by the bank anyway, because we're buying at such steep discounts, and they don't meet necessarily guidelines of the banks. Like they might be holes in the walls, or there might be mold, for instance. So not necessarily like the best asset, but the ugliest asset on the nicest block. And if we improve that asset, then it's going to be worth so much more than what
Yes,
we
makes
paid for it.
sense.
So there's so much equity upside and protection for the investor or the bank. So we got all started helping the average person instead of keeping the money in the banks. The banks always make money. So from day one, we were helping the average person make awesome returns secured by properties, and they got a social impact as well.
What was sorry, go ahead.
No. I got off on a tangent again, so I forget the
Oh, this is the Culture Matters podcast. This is amazing. I mean, what an inspiring story. So I guess, but today, how many properties are you responsible for maintaining? And then I guess, what are your goals for 2024 this has to be a part one, by the way. And I know we're going to do a Leanna and Jake episode that the listeners need to listen to. But this has to be a part one as we close here. So where are we today? Where are you going? And I guess, how can the audience reach out to you as well if they want to be a part of what you're doing?
Yeah. So 50 plus properties, 8 figures under management, 100% owned by Leanna and I. We have no outside equity partners whatsoever. So everything that we have is ours fully.
No general partners, just you guys.
No
general
GPs,
partners.
no LPs, none of that. And if for anybody that's not familiar, that's usually in syndications or in funds. General partners is usually the managers that control the assets, and the LPs are limited partners. They're the investors that earn, returns off of the assets. So yeah, 50 plus properties, eight figures, AUM, 10 million plus. Done a ton of flips, and where our goals for the end of 2023 is 75 plus properties under management by us that we own. Multiple 6 figures in cash flow, positive cash flow, like hit National Bank cash flow, not just total revenue and gross rents. Another goal is to help more families break the shackles of Wall Street, where they can invest in Main Street, and really teach people how to become the bank, because the bank wins. The bank wins all the time. So why, you know that for every dollar that you put in the bank makes 400 to 13% on every single dollar you put in the bank. So why not take out the middleman and start teaching the average person how they can be the bank and earn, 500x what they have in a CD or in a savings account, because these are double-digit secure returns by real estate. We're also advisors for a self-directed IRA company called Horizon Trust. We help people do rollovers with 401ks that are on Main Street with investment firms like Schwab, E-Trade, Fidelity, Morgan Stanley, JP Morgan. We help them roll it over into self-directed IRA accounts, and now they can invest in anything that they want that's not a prohibited transaction. So say if they like wine and they want to invest in a winery, they can invest in a winery. Say they want to invest in a local business, right? A restaurant, they can invest in that local restaurant. You have full self-direction to invest in so many things that you understand, because the majority of people don't understand the stock market. Like, who's controlling it? It just goes all over the place all the time. So why not invest in what you know and what you like and what you see every day? So we help people do that. We help business owners start solo 401ks and EQRPs, where they can shovel away so much more money, tax-free or tax-deferred, and again, invest that into fully self-directed alternative assets. I mean, that's what we do. We hold events called Becoming the Bank, Controlling Your Financial Future. We teach people how to do all this stuff, hands-free, no hassle real estate investing. That's recession resistant. We teach people on how to do that. But yeah, I mean, hey, people can get in contact with me. They can reach me on Jake Penny Real Estate on Instagram, Jake Penny Real Estate on Facebook. Jake Penny on LinkedIn, investwithjakeandleanna.com, pennycapitalmanagement.com. And if you reach out to me, I'll send you a free book on self-directed IRAs, and I'll send you a free book on the EQRP as well. You don't know, no shipping plus handling is 100% free. All I need is your info, and I send it, and good to go. Nothing. I don't expect anything back. Giving value and expecting nothing to come back.
Last question. A lot of the themes of the show the last quarter or two has been around uncertainty. What's your advice, with the rates and the political strife? What advice do you have to the audience and how they can have the mindset or it sounds positive to me, like what you're saying. You're looking forward to 2023, 4, 5. So what's your advice to the audience and how to approach this current state of the economy in the world?
Yeah, I live by like a motto that you create your own world, you create your own economy, you create everything that you want based on you. Nobody is going to, well, first of all, we live in America, right? We don't live in a third world country where shit's just crazy. It would take a lot. I mean, shit's crazy. Don't get me wrong here. Like it's gotten way out of control, but it's not crazy enough to see freaking, troops coming down the street and we're at war. Like that shit's not going to happen. It could very well happen, but it's not. So you're alive, you're in control of your own destiny, you're the captain of your own ship. You go out there and make shit happen. Just because the political presence right now is crazy and the economy is crazy, rates are high, homes are overpriced, doesn't mean you can't go out there and not do deals. Like, don't sit on the sidelines, get out there and actually do some deals. There's deals to be had. We're doing tons of deals every single month. You just have to be resourceful and not just oh, I'm going to look on Zillow, I'm going to look on Redfin. No, get out there, start calling homeowners, start calling realtors, build relationships. Rates are high. Okay, we're locking in at 8%. That's high as crap. It hurts. It sucks. But I'm going to date the rate. I'm going to marry the property. And in 1 year, 2 years, when rates come back down, I'm going to refinance and my cash flow is going to be out the wazoo. So I'm not worried about any of that, because if you sit on the sidelines right now, you're going to sit on the sidelines forever. And deals are made. You make a good deal. So get out there and make it happen.